In a historic 3-2 split, the SEC shattered years of gridlock, greenlighting the first-ever U.S. spot Bitcoin ETFs. Chair Gensler, ever the cautious regulator, surprised some by siding with crypto-friendly commissioners Hester, Peirce and Uyeda, overruling dissenters Crenshaw and Lizárraga. This vote, a nail-biter by Washington standards, cracks open the dam for institutional capital to flood into Bitcoin, potentially reshaping the financial landscape in ways far beyond the cryptosphere. In a landmark decision that reverberated across the financial world, the Securities and Exchange Commission (SEC), on Wednesday, January 10, 2024, voted to approve the first-ever spot Bitcoin exchange-traded funds (ETFs). This historic move, following years of delays and regulatory hurdles, marks a monumental shift for Bitcoin and its potential mainstream adoption. The official SEC website confirmed the 3-2 vote in favor of approval, with Chairman Gary Gensler, Hester, Peirce, and Uyeda casting the deciding ballots. Commissioners Crenshaw and Lizárraga dissented, citing concerns about potential market manipulation and investor protection. The SEC's decision represents a culmination of years of fervent lobbying from the cryptocurrency industry and institutional investors, all eager to gain exposure to Bitcoin through a familiar and regulated vehicle. Prior to this, existing Bitcoin ETFs in the US tracked Bitcoin futures, rather than the underlying asset itself. This limitation hampered potential market growth and liquidity. The approval of spot ETFs paves the way for a surge of institutional capital into the Bitcoin ecosystem. Major asset managers and investment firms can now seamlessly offer Bitcoin exposure to their clients through these ETFs, opening doors for millions of individual investors who might previously have been hesitant to directly enter the crypto market. The increased liquidity and broader investor participation brought about by spot ETFs could have a significant impact on Bitcoin itself. Price volatility might be dampened as large, regulated players enter the market, potentially offering greater stability and attracting further investment. However, it's important to note that Bitcoin remains inherently volatile, and the long-term impact of ETFs on its price remains to be seen. While the SEC's approval marks a crucial step forward, it's not a blanket endorsement of the cryptocurrency industry. The SEC chairman made this obvious after the approval was granted by pointing out that it is not an endorsement of Bitcoin. The Commission continues to closely scrutinize crypto activities and may impose further regulations in the future. Additionally, the specific rules and guidelines surrounding the approved ETFs will need careful examination to ensure investor protection and market integrity. The SEC's decision unlocks a new era for Bitcoin and the broader cryptocurrency landscape. Increased accessibility, potential price stability, and institutional involvement all point towards a future where Bitcoin becomes more deeply integrated into the mainstream financial system. However, challenges remain, and continued vigilance from regulators and industry players is crucial as this unprecedented chapter unfolds.